You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again on the old network to break down some futures options action. Yes, it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We're going to break down the week that was, and indeed still is, from a futures options trading perspective. Everything that's lighting up the tape over there at CME Group this week. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which so many of you are just binging these days. Hope you're having a great trading week. Man, it's been a tumultuous one. A lot to unpack there, including maybe some surprising products that we haven't had a chance to break down on the show before, at least not for some time. Before we get there, though, listeners, a couple things to remind you of at the top of the show. First off, if you're just listening to TWIFO, what are you doing? There's a whole network there, nearly a dozen shows coming at you. So wherever you're getting this, iTunes, Audible, YouTube, wherever, make sure you're getting the full network. B, if you like what you hear and you like this show, could be the network, could be the app, make sure you're leaving a rating or review, whatever your platform lets you do. I saw there were some folks having problems with the Android app. We're working to get that back up and running for you. So if you can't see it in the App Store right now, if you do have it already, it should work fine. If you can't see it in the App Store, you're looking for it, don't worry, we'll get it back up there for you. iOS, still working fine. Of course, you can leave stars anywhere our content is available. It does help folks continue to discover the content. And if you, too, want to discover a little bit more content in your lives, how about you take a walk on the dark side, theoptionsinsider.com/pro, or for you cool kids, /secret club. I wasn't talking to the person next to you, just to you. Don't tell anybody else that. Once you're there, you get access to, 250 plus episodes of awesome goodness exclusively for you on that Pro podcast feed. A couple more coming at you every week, including a great Pro Q&A session earlier this week with Scott Nations, breaking down all things going on the vol side of the fence. Options oddities coming up tomorrow after vol views, giveaways, live streams, all sorts of fun. It's a party going over there all day, all week long. theoptionsinsider.com/pro. But now it's time for us to keep on rolling. I love when we have guests joining us in the CME Group hot seat, but I like when I get to call the shots. That means I get to control the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. Pretty much your top 5 to the light side and to the dark side. And since it's me running the show, listeners, let's kick things off to the dark side, because it does seem like we are, as you might expect, a wee bit biased to the green. In fact, we could probably make a bottom dark 8, maybe a dark 10 if we really scrape, but that's probably about it. Everything else is super green out here this week, listeners. So to the dark side we go. Number 5, KC Wheat, the lesser heralded, the forgotten side of the wheat compared to Chicago wheat, but off 1.12% this week. Number 4, from the Ags, we go to energy. In particular, it's RBOB, off 1.5%. this week. You know the deal, KC Wheat and RBOB, not exactly option stalwarts. Probably not going to make it on the show this week. Number 3, Brent, same deal, off 2.25% there. Then we're hanging out in energy, pretty much the rest of the dark side, listeners. Energy dominating what red there is to be found this week. Number 2, it's WTI, off 2.61%. And number 1, still staying in energy. One of our frequent offenders. You can't escape it these days, listeners. It's nat gas, off nearly 3%, about 2.8%. It was number 1 in the same direction last week, off nearly 9%, about 8.7%. So a banger couple of weeks when you add them up out here for nat gas, even if last week was a little bit more explosive, pun intended. To the light side we go, listeners, and again, a lot of green to be found. It just shows how much green there is when number 5 is silver, going off to the metals to kick things off, and number 5 is up nearly 5% compared to the number 5 to the dark side, off 1.1%. So, yeah, if you're below 5% to the upside, you're not even making it on the movers and shakers. That's how it shows you how much green there is to be found. Number 5, to the metals we go. It is silver, up nearly 5%. If you're wondering where the heck is gold, gold would probably be right around number 11 on our list. It's only up about 1% this week, so not exactly breaking into the movers and shakers, but maybe I can have my arm twisted to talk about some precious. We shall see. Number 4, this one really is intriguing to me. This is our old friend, our old regular on the show, but it really hasn't made it into the rotation in some time. I think we dabbled with it a few weeks ago because it's becoming the story in the equity markets, which is what the heck is going on with small caps. Number 4, the Russell 2000, up 5.06% this week. And again, a lot of that coming in one session. It was up nearly 5% in one session. The story for a while now has been, are small caps decoupling? They're kind of moving to the beat of their own drummer. Some days the rest of the market is rallying. Small caps are selling off. Some days it's moving in the same direction, but just orders of magnitude more. It's been a crazy, wild beast to watch. So I have a feeling we're going to have to sink our teeth into small caps. And it might surprise you what we're seeing out there as well in terms of just how much paper is going up out there in small caps. A banger week by just about any definition out there. Number 3, back to the metals. It's platinum, up 5.2%. Platinum was number 3 in the other direction last week, off 6.16%. So getting back most of what it gave up this time last week. You know the deal. We'd love to sink our teeth into platinum, but it only does about 1,500 contracts. So probably not going to hang out there, but you never know. Number 2, all these sectors that everyone's all hot and bothered about right now. Number 2, we have the real estate sector of the S&P, up 5.61%. So if you're wondering where a lot of the gains are coming in the S&P right now, real estate. There you go. And number 1 light side mover out there this week, listeners, it's our old friend Oats. This one might start qualifying as a frequent offender, which is a shame because it does no options paper. Ran it right before showtime. A whopping 16 contracts on the tape. So unless you want to do a deep dive into all 16 of those individual contracts, probably not going to make it on the list. Oats up 10.14% this week. It was number 2 to the dark side last week, off 6.25%. So it's moving. It's just not generating the paper to make it on the show. If we were just talking about just pure percentage movers, Oats would be on there almost every week. But you know what, listeners, I kind of let the cat out of the bag, and what's really catching a lot of people's fascination right now. I think we have to start in the equities first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, to the equities we go. I know you're going to say, oh, here we go. We're going to dive into the millions of contracts in the E-mini and that kind of stuff. And the answer is no, not this week. We are taking a different tack this week out here in the equities. We're going to explore some lesser heralded waters out here. We used to talk about them a lot on the show a few years back. We used to have the FTSE Russell folks joining us on the show every week. As you'll recall, listeners, Russell 2000 options, they struggle to do. The 20,000 would be a good day. 12,000, 15,000, that'd be a pretty decent day. You get up to 20,000, things are really lighting it up. A few times when we were analyzing Russell 2000 options, they got up to 25,000 contracts. And man, that was a banger week. That was something you really had to pay attention to. This week, listeners, 54,000 contracts on the tape out there in the Russell 2000 at CME. I'll have to go check, but I don't think we've ever seen this amount of paper in the RUT options before. And again, it makes sense. This thing is an unhinged beast right now. It is moving 5% in a session. That's screaming for some options trading on it. If you're not trading options this week in Russell 2000 and you like small caps and you trade options of small caps, what are you doing? This is the week. Russell 2000 right now, listeners, 1776, almost 1777, up about 65 handles or nearly 4%. That's, of course, just since Monday. You go back to the end of the show last week, up 5.06%. So, yeah, small caps going from kind of being the sleepy also ran in the market to all of a sudden just lighting the world on fire. If you've been listening to our option block show, you know IWM's also been lighting it up. IWM off 1.5% today. It was off about 1.75% at one point when the rest of the market was kind of unched to up. So again, kind of moving to the beat of their own drummer again today, and also doing kind of historic volume out there in IWM as well. So whatever flavor you're coming at small caps on the options front by, whether it's RUT, whether it's IWM, whatever your flavor is, it is putting up some numbers this week. And RUT doing its best traditional equity impersonation of that nearly 54,000 contracts. Again, that historic volume amount, 24% of it is expiring in a day. So they're playing the same 0-day / short duration game that pretty much everyone else is playing in the equity space right now. If you thought it was going to be all 30 days and beyond, not happening this week. So yeah, it's kind of hard to talk about vol with a day to go, but such as it is, it's 26.25, which is pretty robust, especially when you compare it to what we're seeing out there in VIX land, hovering around right around a 14. Again, small caps should be structurally more volatile, and certainly this past week they were. So they're living up to that moniker as being the more volatile of the equity assets out there. So intriguing stuff out there. With 1 day to go, the puts are bid nearly 4%. The calls are about 2.3% offered. Let's go out to the most active contract. I said we're at a 1776 right now, listeners. An excellent year. An intriguing strike for small caps. And what is leading the dance out here this week? Well, it looks like it's actually almost a tie. A tie between the 18-quarter calls, so 1825 calls going out tomorrow, listeners. These are trading pretty fast and furious. Nothing on Monday, which is interesting. Then they kind of started ramping up. Then we started seeing the big moving days this week, and RUT options started following suit. We saw 520 go up. These calls go up on Tuesday, all opening. Almost 700 on Wednesday, mostly closing. So some folks maybe getting a little bit effervescent, a little bit optimistic on Tuesday, and then taking them off on Wednesday. And coming in today, we saw over 1,000, almost 1,100 have traded now. That's on an OI of just 370. So clearly opening paper today. Again, on the 18-quarter calls. These are going out tomorrow. Are we going to rally another 50 handles to threaten that strike by tomorrow? We've moved 65 handles this week. That seems like a lot, but hey, small caps, if any index can do it, small caps is the one this week, listeners. So my goodness, 18-quarter calls going out tomorrow. I did not have that on my bingo card, but that's why we've crunched the numbers out here, listeners, because we have to see what's lighting it up. And then right behind it, we have the 1775 calls. They were trading pretty actively all week, with the exception of today, weirdly. It was trading similar paper to the 18 quarters on Tuesday, about 630 going up on Tuesday, mostly opening. So maybe there was a 1775 18-quarter vertical. I could see that happening a lot more than just a straight up 18 quarters. And then they were also closing on Wednesday. So maybe someone put on that 50 handle vertical roughly 500 times and then took it off the next day. That could certainly be what's going on here. That doesn't account for the over 1,000 of the 18 quarters that are going up today, though. This apropos of nothing, it seems like. So that is kind of interesting in and of itself. So, yeah, could be a vertical trading earlier in the week, and then today someone is taking a crazy flyer on the 18 quarters. Are they overriding them? Are they buying the heck out of them, thinking we got a 50 handle pop coming in small caps? We'll find out tomorrow, listeners, which side of that trade was right. Right now, I'd much rather be selling those, but hey, crazier things have happened. Then I said it was kind of a battle, and it often is with small caps. Again, it's a lighter volume product, so it's not all going to be in the 0-day palooza that, you know, the E-mini and everything else is out there in the S&P. And that is the case right now with the 1,900 calls expiring in December, so about 22 days from now, actually taking the number one spot. They did 2,564 contracts. And again, it looks like it's a vertical, but this time a much tighter one. It's the DEES 1880 1900 vertical. Someone put that on 2,500 times on Tuesday. So obviously 5,000 contracts total, opening on both. So there was no roll from the 1880s or anything like that. It would be a weird time to roll your 1880s. But then again, it's also weird to trade the 18 quarters with a day to go. So who am I to judge? And then the rest of the week, pretty much nothing. So it was all concentrated in that 20 handle vertical going up on Tuesday. You like that, listeners? 1880, 1900 by DEES expiration. And which way would you rather have? Would you rather buy that or would you rather sell that? I'll have to look in the blocks later, see if I can find exactly what price that went up for. But you like that as a cheap flyer to the upside? Would you overwrite that? I mean, you're not getting a ton for that, I don't think, if you're going to overwrite that. So intriguing stuff. Let's see what's cooking out there in the DEES expiration cycle. A little bit more room to run out there. The vol there, about 18 and a third, up about a third of a point. So again, a little over 4 points juicier than VIX, which again makes sense. Look at the vol we're seeing out here right now. Everyone always says small caps structurally more volatile than large caps, but we are seeing it literally playing out before our eyes this week. So if you were a doubter on small cap vol, you're like, I don't think it really is more volatile than large caps. Behold the last couple of weeks and tell me if you don't believe that. In terms of skew, the puts last week were about 4.25% bid. This week, nearly 8% bid. So the puts getting juicy. The calls last week, almost flat, about 1% cheap. This week, 5.5% cheap. So the calls getting cheaper, puts getting juicier. Intriguing out there. Not quite the juiciest, though. You got to go out a little ways to find the juiciest puts. And those are all the way out in the June expiration cycle of next year. Both June and September, the puts are 13.5% bid. So not quite 2x what we're seeing in December, but pretty close to it. So if you want a little bit more juice for your puts to the downside, if you can sell them, if you can stomach selling a longer term put in the small caps, they're paying you for it out there. But yeah, that's intriguing. Again, those are the 25 delta puts, listeners. Obviously trading at nearly a 14% premium to the already decent at the money vol, which in June and September of next year is trading around 19.25, the at the money vol. So juicier out there. So a lot to unpack. Are you starting to discover, maybe dip your toes in small cap options? I mean, after this week, certainly can't blame you because we're seeing paper kind of across the board. How about to March of next year, listeners? Now, this is a level I can wrap my head around. This level makes sense. When I came in today, I assumed we would see some paper around this level because it just is the big psychological level in Russell 2000. Of course, what level am I talking about? Of course, it's the 2000 level. We used to joke about it all the time when Sean was here on the show with me. When it briefly crossed 2000 to the upside, you wanted to have a big party, Russell 2000 at 2000. We, of course, had our buddy Blue Putnam from CME on the show not too long ago talking about the impact of these round numbers in indexes like the Russell 2000. So not surprising that we are seeing some 2000 strike paper going up. Maybe it is surprising that it's going up in March of next year, but hey, you need a little bit of time to get up there. 2000 in March, I can stomach maybe before 18.25 by tomorrow. But that's the equity world we live in now, listeners. Yeah, 2000 calls in March went up 2,200 times this week. About 400 on Tuesday, mostly opening. 1,300 on Wednesday, mostly closing. So they took off a lot of OI on Wednesday, and then about 550 today. Today's paper is opening because there's only about 300 left open on the strike coming into today. So they took a lot off on Wednesday. I guess that big move we saw earlier this week, that was it for them. They said, no, we're getting the heck out of Dodge. Looks like it could have been maybe a vertical on Tuesday. We saw about 400 of the 1900s going up, closing, and then about 400 of the 2000s going up, same day opening. So could be some roll action there from the 1900s up to the 2000s. The rest of the week, though, it was all 2000s. Nothing really going on in the 1900s. So it is interesting how we see sometimes these rolls and these verticals, and then the rest of the week, one strike just trades and nothing on the other one. So, yeah, it's kind of funky, I should say, because the rest of March, not that active, but the March pars, the March 2000s, dominating the tape out here, listeners. Man, just an embarrassment of paper out here in small caps. Just across the board. Let's go out to, these are the end of month Ds. So these go out on the 29th. So these are not the typical expiration. These are the end of month. We also saw the 1900 calls going up out there, nearly 2,000 times this week as well. The big day for these was about 1,000, almost 1,100 on Tuesday, mostly closing. So it seems like somebody is bailing on these this week, listeners. We saw about 600 today. That's opening because only about 300 left open on this strike. Saw a couple of hundred each day the rest of the week. Looks like mostly closing throughout the week. And then today's paper, again, anyone's guess. So only a couple of hundred left open coming into today. So some folks, I guess, getting the heck out of Dodge on the 1900s. These are end of month Ds out there. Worth noting the future there, 1794. So obviously a little bit higher, but not quite within striking distance of that 1900 level. So interesting time to be bailing on the night. Maybe they say, hey, this is the rally we're going to get. This is it. I'm taking what I can get and getting the heck out of Dodge. And maybe they were overwriting the hell out of them and they decided to buy them back. They got spooked. Intriguing stuff either way. Maybe the skew will give us more insight into that. Yeah, the calls got a lot cheaper this week. They were 2% cheap last week, 5.8% cheap this week. So that usually speaks to probably some folks selling to close on some of these calls out here, getting the heck out of Dodge, just dumping these calls, listeners, and taking their money and living to fight another day. The puts last week, 5.2% bid. This week, 8.2% bid. Man, just an embarrassment of riches out here in the Russell 2000 options, listeners. My goodness. Also, I neglected these. Going away in 4 days, listeners. The 1770 puts. Now, there you go. If you're talking about some zero-day or near-dated paper, I expect strikes that are a little bit more relevant to where we're trading right now. 1770 puts, I expect some action in those when we're hanging out at a 1775. That is certainly a strike we could threaten in a few seconds, let alone in 4 days. So 1770 puts going up 500 times yesterday. All opening. Looks like it was a 1770, 1740 put spread going up 500 times. People love their 500 lot verticals in the RUT options for whatever reason. We see a lot of those going up. Looks like on Wednesday we also saw the 18.5, 1860 call spread going up 500 times, opening on both sides there. So 500 lot verticals is the trade of the week. It has been the trade for a while, actually, out there in small caps. And then again, weirdly enough, we saw that vertical trading opening on both. So no rolling of the 1770 puts down to 1740 or anything like that. And then after that, today, we saw almost 1,300 of the 1770 puts going up by themselves against OI of just 500. So clearly opening paper. So 500 of the vertical going up on Wednesday. And then today, I guess just for fun, almost 1,300 of the 1770 puts by themselves. That's a pattern we've seen a few times here now. Big verticals going up, either a roll or just straight opening, and then later on in the week, one leg of that vertical, the meteor leg usually, doing a lot of paper by itself. So intriguing trading patterns afoot. But again, it's a very intriguing product. Man, we could sink our teeth into a lot of small caps. I have a feeling, listeners, given the way small caps are acting right now, this is not the last time you and I are going to have a chat about all things Russell options. So again, pick your poison. If the RUT option's a little bit too intimidating for you, IWM is out there. Whatever you like to play small caps with, if you were maybe not paying attention to this index before, now might be the time to start paying attention. As we keep on rolling with the show, listener, as we can't ignore this sector either, we got to go out to a little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, 20 minutes just on small caps. Who'd have thunk it? But that's where we are in the market right now. You know where to go to find Nat Gas at this point, listeners. It seems like it's on the show almost every week. Go into the cmegroup.com/TWIFO. Get into that drop down, pop out of equity indexes, get out of small caps. I know it's hard. Pull your attention away for a second. Go up one slot to the energy asset class. Then in product family, we're going to hang out in Nat Gas first. Nat Gas been flirting with this 3 handle for a while, continues to do that this week. 306 is where it's hanging out right now. Not much of a move this week, but from our show last week, it has dropped about nearly 3%. In terms of paper, again, a surprisingly robust week out here. 664,000. Is this the new normal? I mean, we used to say 400 to 440, 450. That was the normal range for Nat Gas. Now that we're up at a 3 handle, is it 660 the new normal? We've seen this a couple of weeks in a row now. And again, we're heading into a holiday week next week. So you'd expect a little bit lighter paper on the tape, but not for Nat Gas this week. Folks are coming to play in Nat Gas. Maybe the fact that it's just constantly represented on this show. It's constantly in the headlines. It's constantly in the awareness and mind share of a lot of traders out there that is starting to lend itself to some more volume. Whatever it is, listeners, folks are coming to play in Nat Gas options yet again this week. The big dog of that, 664,000 contracts, nearly 40%, 39% going up in the front D's contract. It has about 11 days to go. Remember, no weeklies, no dailies, none of that stuff, no zero DTE out here in Nat Gas. You could argue maybe we're overdue for maybe some more short duration contracts, but right now all we have is monthly. So that front D's contract, it is effectively in a weekly range now. So you're getting some of that. Again, that one, 11 days to go. And in terms of vol, Nat Gas for a while has been kind of dominating what we're talking about here, even though crypto starting to get juicy, starting to get frothy again after flirting with the mid-20s from a vol perspective in Bitcoin and ETH, starting to get more respectable up into the mid to high 50s, if not the low 60s. So starting to get within striking distance of Nat Gas. But right now, Nat Gas still ruling the roost at about a 68.20, up about 2.5 handles in that front D's contract. Skew-wise, kind of a mixed bag. Last week, the puts were 2.3% bid. The calls about 3%. The puts were 2.3% offered. The calls were 2.8% bid. So a bit of a slight bias to the calls. This week, kind of a dealer's choice. Calls about 1% bid. The puts, I should say, about 2% offered. So not a huge skew evolution. Not a huge skew bias right now, actually. It seems like, at least for this D cycle, folks are very happy to just see Nat Gas vacillate around the 3 strike, which is pretty much where we are and where we have been. In terms of the most active contract, though, that gets a little bit more enticing. That goes up to the 3 half calls. So not the 3 calls that you might expect, not the 3 puts that you might expect. It was the 3 half calls expiring in about 11 days, leading the dance this week with 35, almost 36,000 contracts, and getting more active every day this week, pretty much. About 8,000 on Monday, about 8,000 on Tuesday as well. Wednesday, 9,000. Today, almost 11,000 contracts on the tape. So these 3 half calls doing more paper with pretty much every day this week, also all opening. So a ton of paper going up to open this week on the 3 half calls. Again, today about 11,000 contracts, and the OI about nearly 25,000. So it's anyone's guess what the heck they were up to with the 3 half calls today, but clearly a lot of paper. Then right behind it, listeners, we have the 4 calls. So if 3 half strike in 11 days doesn't seem too outlandish, too optimistic for you, then allow me to present the 4 calls going up 26,600 times this week. Again, very active all week long. Again, the big day was Wednesday, almost exactly the same amount of paper on Wednesday. 9,043 of the 3 halves and 9,041 of the 4s. So has the whip of maybe a vertical out there, listeners. You don't see them line up that nicely too often. The 4 calls traded 6,600 times on Monday, 5,500 times on Tuesday. As I said, 9,041 times on Wednesday, 5,400 times today. 25,000 contracts open here as well. Very similar OI to the 3 halves, even though they traded a little bit different throughout the week. So again, not surprised to see some vertical action there. I certainly like buying the 3 half 4 vertical with 11 days to go better than I like just buying the 3 halves or the 4s outright over the next few days. But then again, Nat Gas, crazy. You never know what's going to pop off in that region over the course of the next 11 days. Putin could go crazy again. Something else could go crazy. We can get some crazy weather. Either way, that could certainly drive us back. 3 half. that seems like it might be a bridge too far. But then again, we've seen crazier things out there. Would you rather overwrite the 3/2s here or buy them? Listen, would you rather be buying that 3/2-4 vertical or selling it? I'm curious. Hit us up with your thoughts on it. Do you think NatGas can make that big of a move in just 11 days? It is NatGas. It is one of our frequent offenders. If anything could do it, this is certainly the product here on the show. So maybe we can put small caps in that category now as well. But intriguing stuff out here. And then right behind it, we had the 3 puts. Now, this is more along the lines of what I expected. They went up 25, almost 26,000 times today. The big day was Wednesday, 10,300 on Wednesday, 4,000 and change each Monday and Tuesday, closing both of those days, and then opening today, opening on Wednesday, then 6,500 going up today. Worth noting, there's about 32,000 open on this strike, so anyone's guess what today's paper was. That's a lot of paper, but again, that's the 3 puts. I expect those to be kind of leading the dance out here this week, and they were not. They were only number 3, and they're right behind it. 3 puts, not doing it for you. How about the 2 3/4 puts going up about 25,000 times? Actually, only about 133 contracts difference between the 3 puts and the 2 3/4 puts this week. So neck and neck paper. Looks like closing all week long, though, on the 2 3/4 puts. So maybe some folks dumping those out, rolling them up to the 3 handle, maybe. Seems like a little bit late to be doing that, but we've seen crazier things. And then 9,100 of the 2 3/4 puts going up today against open interest of about 24,000. None of it lines up that well for verticals, with the exception of maybe Monday. 3,500 of the 2 3/4 puts going up versus about 4,100 of the 3 puts that day. So maybe some vertical action, but I wouldn't be surprised to see some in there. But intriguing stuff nonetheless out here. Let's scroll a little bit farther, listeners, to see if we can find any other interesting and or aberrant prints. Looks like the strip this week is the 1/2 put strip. What are we doing? It used to be 5, 6 calls going up, and then we saw a lot of 2 puts, 2.5 puts. The 1.5 puts going up roughly 5,000 times from April out to about September of this year. Looks like that's the strip du jour. These strips are kind of fascinating to me, listeners. I've yet to see the purpose behind them. They go up all over the place. They go up like clockwork every week. I haven't really had a chance to sink my teeth into them too much of late. Maybe I need to go back and tilt that windmill a little bit again to see exactly what they're up to out there. But if you're intrigued, 1/2 puts going up for size. Let's see if they went up on one particular day or if they went up. The past is prologue. They kind of usually go up throughout the week and not just in one session. Yeah, that's the case. They went up 2,000 times on Wednesday, 2,700 times today, and about 250 times on Tuesday. So again, not even doing it all in one hit. They scatter it throughout the week. So it's a very clear intention behind it. I'm yet to determine what that is, but if you have theories, listeners, hit us up. Let us know. 3 puts also going up this week out in October, leading the dance with about 14, almost 15,000 contracts. So pretty active out there as well. So again, I expected more action on the 3 strike than we're actually seeing this week. But again, that's why we crunch the numbers, listeners. 14,000 of these going up this week. The big day today, 7,500 today. So over half going up today. 5,700 yesterday, mostly opening there. And then 800 on Monday, a couple hundred on Tuesday. It's like slightly closing on Monday, opening on Tuesday. Today's paper, we don't know. Obviously, there's 13,000 and change open on this strike, so they could be closing today as well. Yeah, interesting stuff. Again, that's why we crunch the numbers here, listeners, because you never know. Did you have 3/2 calls going out in 11 days on your bingo card? I did not, but that's why we crunch the numbers. 3/2s and 4s trading actively with 11 days to go. Interesting. We're going to head for another much higher nat gas regime in the span of a couple of weeks. I guess we'll find out here, listeners, as we keep on rolling. Let's keep it in the energy complex because, again, they are dominating our dark side this week, and also because, quite simply, they are also dominating, I know for a lot of you out there, the mind share out there. You see it. You see it when you heat your house. You see it when you fill up your car out there. Of course, the other side of nat gas. We're talking about WTI. Number 2 to the dark side this week, off 2.61%, so just slightly behind a nat gas this week. Go into that asset class drop down, listeners. Pop out a nat gas, and you're going to go up 1. Actually, you're going to go up 2 to crude oil, then choose WTI, and we're off to the races. WTI hanging out right now, listeners, about a 73 even. off a little over 4 handles, about 408, about 5.25%. So obviously a rough week since Monday. If you go back to the end of our show last week, which remember was at a weird time because we had our special guest Blue. So it was an earlier show last week. So our week-on-week analysis is a little bit funky this week, but we're off about 2.61%. So intriguing stuff out there. In terms of action, a decently active week. Again, heading into a holiday week, you would expect maybe volume to be a little bit light, but 474,000 contracts on the tape in WTI this week. So interesting stuff. And of that, 44.6% going up in the Jan contract. It has about 28 days to go. So for all this fixation on 0 days, and there's a contract going out in less than a day, listeners. So you can do that 0-day fun if you really want out here. But no, folks are focusing on the 28-day contract. That's future hanging out again, 73.07. The vol right now in WTI is starting to look a little bit frothier, a little bit more respectable. 41.30, up nearly 4 points, about 380 on the week. So energy, one of the few bastions of volatility over there at CME right now. In terms of skew, listeners, last week the puts owned the show. They were about 7.25% bid. This week coming in a little bit, about 5.7% bid. Again, this is in the January expiration cycle. The calls last week, nobody wanted them. They're about 4% cheap. This week, about 0.8%. So they're bid back up about 3 points, I should say. So kind of flat on the calls and a little bit of a premium to the puts. So looks like a modest equity skew out here at the end of the day. Maybe showing us that, again, 73 handle. Maybe some more concern to the downside to go here in crude oil. In terms of action, what was the most action-packed option out here this week, listeners? It was the Jan 85. So again, I did not have that in my bingo card either. So again, that's why we crunch numbers. That's why you have to look at the report every week and listen to the show, hopefully every week, listeners, because there's a lot of surprises lurking for us out there in the options paper. The Jan 85 is going up 18,500 times this week. The big day today, 8,600 today. So today a pretty hot day for the energy complex. Nat gas and WTI options putting up some numbers today. 6,300 yesterday, mostly opening there. 2,400 on Tuesday, opening again, and 1,100 on Monday, again opening. Today's paper, 8,600. That's against OI of about 16,000. So again, they could be potentially closing there as well. But 85 calls opening for size in January this week. Kind of interesting. Do you think, listeners, that we could be threatening that 85 strike? Again, WTI has been moving another 4 handles just this week. So 85 isn't that far away when you look at it at a 4 handle a week clip. But that said, it does seem fairly lofty right now. Would you rather be buying or selling these 85s, listeners? They went up pretty actively again all week long. The big day today. And then right behind it, we have the 80 calls going up about 11,000 times. In fact, it's very tight race between the 80 calls and the 70 puts, all in January. The 80 calls doing 4 contracts below 11,000. The 70 puts doing 10,858. So a pretty close race, but the 80 calls taking it for number 2. The big day for those also today. So maybe some 80, 85 vertical action going up. 6,000 of the 80 calls going up today. 2,700 yesterday. 1,700 on Tuesday, slightly closing there, and about 500 on Monday. So doesn't seem like there was a ton of vertical paper going up earlier in the week. So, but the paper does line up a little bit closer today. 6,000 versus 8,600. So potentially some upside vertical action. Again, of the two, I like that better than just buying the 85s. But hey, we never know. Would you rather overwrite those, listeners? Would you be a WTI call overwriter here at the 80 or the 85 strike? Would you be buyers here? I'm curious. These are all Jan, so you got a little bit of time to work here. Right behind it, like we said, the Jan 70 puts a little bit closer to the fire here, going up nearly 11,000 times this week as well. The big day also today. So today, obviously, the driver's seat for volume this week in WTI options. 6,400 contracts on the tape today. 2,600 yesterday, 1,400 on Tuesday, about 400 on Monday. Seems like mostly closing. There's about 11,000 contracts open on this strike, so it's anyone's guess for today's paper. But if the trend of the week is your friend, then today's paper is probably closing as well. In which case, a lot of folks may be taking this move towards a 70 handle, taking their profits, getting the heck out of Dodge. At the end of the day, listeners, a hedge doesn't do you any good if you don't take it off. So maybe some of that action going up out here today as well. Also, the 75 puts trading pretty actively, about 9,500 times this week. Today and yesterday, the big days. 3,600 today, 3,800 yesterday, and then about 1,200, or 1,700 on Monday, not much on Tuesday. Worth noting there's about 12,500 contracts open on this strike coming into today, so today's paper of about 3,500 on the 75 puts is anyone's guess what they were up to. Could be some vertical action, though. It does line up with the 70 puts, roughly 2-1 today. So intriguing stuff out here, listeners. Let's just scroll a little bit because we always know there's always some interesting and or aberrant prints going up a little bit longer term in WTI as well. We like to ferret those out as well. Let's go out to Dece of next year, listeners, all the way out to December of 2024. Where will WTI be a year and a month from now? That is the game we're all playing here, right, listeners? How would you like the Dece of 2024 110 calls in your back pocket? Somebody slinging a whole bunch of those today, nearly 9,000. 500 traded on Monday, and then nothing the rest of the week. And then 8,903 today. That's on OI of a little bit shy of 8,000. So opening paper on the 110s today. Interesting. Also, we're noting 2,150 of the 70 calls going up. So it's not quite 4-1, but it kind of lines up. So a 1x4, listeners, the Dece 2024 70, 110, 1x4. That'd be a weird one as well. That could kind of be a little bit of a futures repair type trade, maybe. If you've been wearing WTI down a little bit here, down to the 70 strike, you buy one, you sell four. If you have the underlying to hold against it, so of course you're not going to get margin to death, and you're not going to have naked short units to the upside. And 1x4, that's a pretty, usually you see those 1x2. 1x4 is a funky ratio if it is a vertical to do a repair, but hey, we've seen weirder things out there. Also worth noting in Dece of 2024, this is the kind of paper that I love. The Dece 60-61 put spread going up today 2,500 times. A $1 wide put spread. Worth noting 1,800 of the 55 puts, the double puts, also going up. So it doesn't line up that way either. The 1,800, the 55s versus 2,500 each of the 61 and 60 puts. Doesn't really make sense anyway you parse it, listeners, but especially as a 60-61, a $1 wide put spread. We saw these for a while to the upside. Remember, we saw those $1 wide call spreads going up 20, 30, 50,000 times at a clip sometimes. So someone in WTI does like $1 wide verticals, whether they've switched to the puts, let alone all the way out. But hey, we've seen weirder things out here, listeners. All right, and that music means that's going to do it for this Just the Facts, Ma'am edition of TWIFO for this week. And man, what facts they were. Fascinating stuff afoot out here. Small caps, we could probably done the whole show just on what the heck is going on in small caps. If ever there was a time, listeners, you want to start paying attention maybe to a little bit of small cap action, now might be the time out there. Also, always fascinating stuff to be found out there in the energy complex as well. Thank you for joining us this week on TWIFO. Remember, check out CMEGroup.com/TWIFO, TWIFO, if you want to see these reports for yourselves. Good news for you, they will be running next week on Thanksgiving, so if you get tired of your family, you want to take a break from the bickering at the table, you want to go check out some TWIFO reports, they'll be there for you. Won't be much paper to parse because it'll be a shortened holiday week. Also worth noting, no TWIFO next week, obviously, because, of course, it is Thanksgiving. No paper. Everyone's going to be talking to the family. We're not going to be doing a show. We're not monsters. Not going to make you listen and leave your family. So no TWIFO next week, but we're back again in 2 weeks. Of course, in the meantime, you can check out all the other content we have going up on the network. And then, of course, if you want to take a journey to the dark side, only one place to go, theoptionsinsider.com/pro, the place to go to get your hands on all that fun pro goodness. That's going to do it for us for this week, and we're back again in 2 weeks. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.